Hello and welcome to my channel Let's Trade, where we do analysis on different tickers, and I'm here again back with you with another weekly analysis on commodities. Without any further ado, let's start with today's video. So first let's start with gold. This is a weekly chart, and as we can see on the weekly chart, market has given a clear breakout from the downward trend which it has been making since last few weeks. Market has been making this downward trend. Here market waited for a while, the horizontal range it created, and it has given a clear breakout, and after that a pause candle, which was very necessary if the trend has to continue or even if a trend has to break. Then on the different time frame, on the daily time frame, if we see on the daily time frame, we can clearly see that market has given a breakdown from last what we have decided, and now it has been trading at a daily resistance, daily horizontal resistance. This was the accumulation zone which market has created, and now it has been waiting in here. There was a trend line as we discussed on the last video, as you can see. So this was a trend line which market has been following, which was good for finding selling trades, but after that the structure has changed. Market has waited for several days in here. Market has gone from up and down like this, and then given a clear breakout. This was the pause candle. Last week's video ended at this red hammer. After that hammer has been engulfed by this great big bullish candle, and after that market has been waiting since last few days here, and this is a big horizontal resistance. 4380 level is a big horizontal resistance. Until and unless gold crossed this level, we couldn't find any good buying trade, and even if you try to take any trade, that might be a trap. So we will try to avoid any type of buying trade at this level until unless market closes above this level with a good bullish candle like this engulfing candle, or a hammer with no upper or very short upper wick and a big lower wick. This will be also good sign, because market has came like this, waited few days, and with a wick market can go up. That will be a great sign. Or a bullish candle which has very small wicks both on the up and downward side, that will be great too. Let's go on the 4-hour time frame. So the conclusion till now is on the weekly or daily time frame, what we can see is market is in this sideways range on the resistance zone, on the important resistance zone. And if you can see in the 4-hour chart, there's a clear trend line breakout. As we can see in here, market has created a triangle pattern and then broke from here. This was here, as you can see, market has created a triangle pattern, and then this is a clear breakout. After that market has been waiting in this level for a while, then again broke out, waited, and now it is making a range. So until unless it's cross the 4450 level, or on the below side 4320 to 20 level, there's a no good trade we can find. If you have to find selling trade, then this level is crucial, and if you have to find the buy trend, this level is crucial. Until this is a no trading zone, we will not trade anything in this. This is a no trading zone for us. There can be two sides to this market right now. So if gold has come like this, and then like this, and there is a two possibilities. First one is it has gone up here, then it will again come back to the support and will break it, and after retest will go back to the breakout level, which was 400, which was around 4000. So this might be our left shoulder, this will be our head, and this will be a right shoulder. So this has become a head and shoulders pattern, and after the breakout there can be good lower side. This will be our target then. But if it doesn't breaks at that level, then we'll have to wait until it closes above 4335 level. Above that we'll find a good bullish trade, but right now it's in the no trading area. Let's go on the 1 hour time frame. It will confirm what we have decided. What we can see in here, the sideways market has gone up and it's been just going up and down at that level. This is not a great sign for a bullish candles. See, you can count the bullish candles, the green candles in here. There are so many green candles, but the area it has traveled, the price it has traveled is not that big. It's from around 4320 to just 4380. Considering the number of candles, it's not a big price or a good move for bullishness. So we'll try to wait until and unless it breaks this area. Let it break this area. When it breaks this area, we'll try to find a buy trade. Until unless we'll just wait on the 1 hour time frame also. Let's go on the intraday time frame, which is 15-minute time frame. Those who trade at the 15-minute time frame, they also can see that market has been waiting in here. This is currently in no trading area, but the range has got much shorter right now for a 15-minute charge. The lower part will be 4370 and the upper bound will be 4400. Let's take the round level 4400. Until market breaks above this level, there's no trading area. Market has given a good accumulation at the horizontal support, then went up, paused for a while, then again went up. Now it has been going sideways until unless market break out about 4400, will not take any buy trade. And if market breaks below this level with a retest, then our first target will be support. Then we'll go on the higher time frame and try to confirm that this is a head and shoulder pattern, and we can confidently take any sell trade. Let's now jump to the silver. As you can see on the silver weekly chart, market has been following the market has been following the trend line, the upper trend line and the lower trend line. This has been the resistance and this has been the support. Market has came like this, and the range it can trade has gone very short. So here's the accumulation part, and after that accumulation market has just broke out. And on the weekly chart, if you will see, there's a pause candle, there's a hammer in there, if you can see. Same like gold, it is a hammer. And what on the weekly chart, what will be our plan? Until unless the low of the hammer gets break, will not find any sell trades, will not take any sell side trade. And we can take a small buy trade if market comes like this up, but this will be our first resistance. This will be our first short term target. We'll see it in the 15-minute chart, that will be much clearer. But if market breaks above this hammer and gives a closing in the next week, then and then only we will be bullish. Until unless this might be a good breakout failure plan, because as you can see, the upper trend line is very sharp, very aggressive. It has came down in a very aggressive pattern. And what was its touch point? This is the first, the second, and with these 2 points trend line we draw the trend line. So this is just the third touch point. That's not, doesn't have that much of power. It should, or the possibility of it's getting a rejection is much higher. So it can happen that market will try to cover this part of the trend line but will not break the low, or even if it breaks the low, the candle will not close above the high of this hammer, and market will take a sharp U-turn and will come crashing down this horizontal trend line. This will be our support zone if market comes crashing down. And if it doesn't, if it engulfs above 70, then we'll try to find above the 70 level. If the price sustains above 70, then and then only we'll consider it as a clear breakout and we'll try to find a buy trade. Let's move on to the daily chart. So on the daily chart, what you can see is just as what we have discussed, the upper trend line, the lower trend line, the accumulation which has happened, and now market has given a clear breakout. If I will show you on the, let me show you it on the line chart. So as you can see, market has given a clear breakout in here, and it's been waiting. This has been the breakout of the horizontal and the sideways range, and this is the breakout from the trend line. And since then market has been waiting on this sideways range. This is the upper horizontal sub resistance and this is the lower horizontal support, and market has been, the price has been taking rejections from the support as well as from the resistance and been trading sideways since then. And on the 4-hour chart, if we see on the 4-hour chart, we can clearly see market has done some form of breakout structure, because this is our first higher high, this will be our first higher low, the second higher high after the breakout, the second higher low, the third higher high, the fourth higher high. So what is happening is the price is making new higher highs. This is the first higher high, second higher high, third higher high, fourth higher high. So market has been continuously going upward, and the higher lows are also continuously going up. But after that, this was our third higher low, but the higher low got break. This is a breakout structure, but not that major, because if you see on the candlestick chart pattern, what you can see is market hasn't broke this area. When if market comes below 62.7 level, then and then only we'll try to find some selling up opportunity on the daily chart or the 4-hour chart. Let's go on the 1-hour chart. On the 1-hour chart, what we can see is market has been trading in the mostly in the sideways zone. So if you try to draw a range, this will be the range between 66 to 63, means $6 will be the range of the market. If it goes above 65.5 with some form of consolidation in here, then it will be a good buying opportunity and we will see for buying trades, but we will not try to find any selling trade below 63 area. Only if market goes below 63 with a clear retest, then and then only we will try to find a selling opportunity. Until then we will try to just be patient and not trade at all. On the upper range will be 66.5, around 66.5, and the lower range will be 63. If market makes any move above our range or below our range, we will try to take any trade, but if not, we'll just wait patiently for it to come. On the 15-minute chart, there's nothing more left to discuss, just the levels. So the selling level will be 64.60. If market breaks below this, then the immediate target will be 63.65. But if market goes above that, so we'll wait for a clear breakout. If market tries to go like with a big bullish candle, market tries to give a closing above 65.60, then we'll try to find a retest around here, like consolidation in here, and then breakout, unless there will be no buying trade. If you want to take some risky trades and the Monday market opening is a gap opening or very less gap opening, then the above target is 65.40, which is immediate target, and the below target is 63.65. I hope this analysis helped you, and I'll try to come up with more tickers in the next video. If anyone has any kind of doubt, they can ask in the comments. Feel free to ask, and please like and share. Until then, goodbye.